Hello once again and welcome to the show. Well, Victoria has suffered the lowest growth rates across the country since the onset of COVID, with median prices declining 4.4% in Melbourne and 7.6% in the regions since the peak in 2022. That's according to CoreLogic figures.
The fundamentals remain strong. I keep saying this wherever I can. Nothing about the livability, the attractiveness, the amenity, the appeal of Victoria has changed. That remains the case. And it's still a fantastic place to live, and it's still a fantastic place to own property as well.
Well, that's Jacob Caine, who is the head of the Real Estate Institute of Victoria, who says the fundamentals and long-term growth drivers for property remain very strong in the Garden State. Here, Jacob's detailed update on the Victorian market as he joins Bushy today for this extended catch-up. Before we start, I want to thank our supporters and content partners Realty, BMT Tax Depreciation, Know How Property Finance, Get Rare Property and Apiro Marketing. You'll find us on all podcast players as the Property Hub, also on the Southern Cross Austereo Network, Hot Copper and on all social media platforms.
Property deductions can save you thousands of dollars each year. To make sure you maximise deductions, you need to work with the most experienced quantity surveyor in the country. BMT Tax Depreciation is the leading specialist in the industry. They've completed over 700,000 tax deduction schedules for residential investment and commercial properties Australia-wide. BMT guarantee to find double your fee in the first full financial year deductions. Call BMT on 1300 728 726 today for an obligation-free quote. Realty Talk and your host, Bushy Martin.
Now, the world's greatest living investor, Warren Buffett, is famous for saying that you need to be fearful when others are greedy and greedy when others are fearful. And as a long-term closet contrarian, to be greedy when others are fearful scenario appears to apply to the current state of property in Victoria, which unfortunately has copped a media flogging in recent times and is a bit on the nose nationally, following a spate of headlines painting a picture of gloom and doom on the back of rental reforms, land tax implications and a raft of other tax grabs, changes and negative debate, with the Property Council recently reporting that confidence in the Victorian property industry is at its lowest point since the COVID lockdowns. Consequently, Victoria has suffered the lowest growth rates across the country since the onset of COVID, with median prices declining 4.4% in Melbourne and 7.6% in regional Victoria since the peak back in early 2022, against the backdrop of a 11.8% national annual growth, according to the latest CoreLogic figures. But contrary to all of the negative clickbait fear-mongering sentiment, from the outside looking in, the fundamentals and long-term growth drivers for property remain very strong in the Garden State, which creates great opportunity for the savvy investor. So, given this often contradictory and conflicting confusion, it'd be great to know exactly what's going on with property in Victoria and what the future holds. And one of the best people to do this in Victoria's current president of the Real Estate Institute, Jacob Caine, or Jake as everyone refers to him as, who's also a director of Ray White CRE, formerly Caine Real Estate. And interestingly, he started his career as a principal tenor with Opera Australia. So I'm sure you'll be singing the Victoria's praises today. So welcome to the show, Jake.
Thanks for having me on, Bushy. It's a pleasure to be here.
Now, Jake, I guess to kick things off, we're keen to feel the sort of local property pulse by considering the sort of balance of current and future upside lift as well as downside drag factors in Victoria. And we want to look at that across locations, property types and price points. So let's start with a bit of a look at current property conditions and influences before we look to the future. So to start things off, what's your overall read on the current Victorian property performance conditions?
Yeah, the doom and gloom headline grabbing intro that you've detailed there with regard to Victoria is probably the pervasive sentiment around property here in Victoria. Those figures that you quoted from CoreLogic are replicated across the various, data collection outfits. The Real Estate Institute of Victoria included. We track the data and we monitor median prices, both in micro markets and the macro market being regional and metro Melbourne. We've seen median prices decrease across both metro and regional Victoria. There's a few reasons that are contributing to that. You touched on the sentiment and the around rental properties and property investment in Victoria. The raft of legislative changes, as well as most recently the imposition of the COVID debt recovery levy, which is essentially just an increase in land tax, has driven, I suppose, a significant number of property investors to exit the market. So that's translated into higher volumes of properties, of homes being on the market, and that's contributed to that downward pressure on prices, because despite the fact that our population continues to increase very significantly, particularly through the migrant channel, most of those new arrivals into Victoria are actually heading straight into the rental market. They don't have the capacity or the appetite to purchase properties at this stage. So, as you said, though, the fundamentals remain strong. I keep saying this wherever I can. Nothing about the livability, the attractiveness, the amenity, the appeal of Victoria has changed. That remains the case. And it's still a fantastic place to live, and it's still a fantastic place to own property as well.
Yeah, 100%. And those lifestyle factors it tend to drive most people's property decisions on an increasing basis since COVID and the recognition of the importance of that. But I'd love for you to break it down a little bit more in terms of perhaps performance variations across the regions, property types, and price points, if you could, because the medium figures often hide the reality that sits within. Are you able to slice it up a bit for us?
Yeah, absolutely. Look, and this is a trend that's replicated across most of the major capital cities, and we're even seeing it in around regional centres. Is essentially people are looking for affordability, because the cost of living, cost of housing generally is just so challenging in the current climate. So what we're seeing is the outer suburbs, particularly the west of Melbourne, enjoy significant growth in terms of their median prices. And that's because the median price there for a 3-bedroom house, places like Melton, for instance, might be sitting around that $650,000 mark. Whereas if you come 10, 15 Ks closer into the CBD, that's $1.2 million. It's double. So that's just the law of affordability and supply and demand, right? That people will pursue that. And we're seeing that replicated out in the regions as well. So the big regional centres like Bendigo, Geelong, Ballarat, they've become internally around their CBD areas unaffordable as well, right? Where historically that used to be a much more affordable option for people. Now what we're seeing are neighbouring towns or the outskirts of those regional cities start to enjoy that very significant, double-digit growth in terms of median house prices. We also, I suppose you touched on lifestyle. We're seeing huge variability along the coastal region. So the Great Ocean Road, the Mornington Peninsula, we're seeing units in those areas come down very significantly, but houses go up very significantly. Why? People are making the decision again to pursue lifestyle and affordability simultaneously. The median prices in suburbs or towns like Blairgowrie is still comparably more affordable than the sort of equivalent in the CBD or surrounding, inner east, inner south, inner north of Melbourne. We're seeing units continue to, across the board, perform or outperform houses. Again, it's a simple equation. They're more affordable. We're having people, it's a segment creep, so to speak, downwards rather than upwards. So people that might have a year ago been contemplating or trying to purchase a small first home, a house, now they're thinking, what, we'll go down, I'll get a decent quality, larger apartment, but I'll save myself $500,000 in the process. So it could be $1.2 million for an inner suburban house or $700,000 for an equivalent floor space apartment. They're broadly the trends. Again, micro markets, we see some some really staggering results quarter to quarter. It's better, as you said, to track them across the year. That gives that more insight. But in one of these quarters, we saw Brighton become the most expensive suburb in Melbourne just for one quarter. It overtook Toorak, and people were like, "Oh, what's happening here?" It's Brighton. It was just the result, the sample of properties that are sold within that given 3-month window. And for some reason, Brighton outperformed Toorak, but without question, Toorak remains the most expensive place to buy real estate in Melbourne.
Yeah, and there I guess reinforces the danger of relying just on median figures, because if you have one outperforming sale in that particular period, it can sort of tilt the results. So taking that longer term view of where things heading gives a more balanced view. But let's sort of break it down a little bit now and start with the supply side. You mentioned that there's a lot of, or an increasing number of listings compared to a lot of states where they're actually historically have got very low listings. I'd love your thoughts on dwelling approvals and some of the construction challenges that are also impacting on the supply side, if you could.
Yeah, absolutely. Look, the Victorian government in September last year unveiled their housing statement, which had some incredibly ambitious plans and targets for the supply of new homes into Victoria, and around them a suite of measures that were designed to help open up the pipeline for new construction. Now, they had some early successes there, definitely. They formed a body which essentially had the capacity to intervene on planning approvals that were sitting too long at a council level. And throughout the first 3 to 4 months post the announcement of the housing statement, they were able to approve around 60-70% of more than 1,400 developments that had been sitting at council for more than 12 months. Great result, right? Yeah. But like everything, do they actually get built in the end? Are they going to be constructed? What's the lead time to see those homes actually become available for the people living in Victoria? So, like everywhere, we're struggling with workers. The big infrastructure projects around the country have sucked up a huge amount of the construction and complementary skills and trades that we need to build the home. So we saw our building rate sit below previous years and significantly below the sort of targets that the government and more broadly society was hoping to hit. So supply in terms of homes that meet the needs of the people that are able to buy them, and we often don't talk about that. Like we think, well, there's more supply because there are more investors selling the property, but who actually wants to buy those properties? We need properties for families, we need properties for individuals, we need properties for couples, we need properties for retirees, and do we have the mix right?
Yes.
So that's been jump in.
Yeah, no, I 100% agree. It's the segmentation that becomes important. It's not the number of properties, it's the suitability of those properties to suit the demographics that is the key factor there. And while we might have freed up the approval side of the equation, if we're still the reliance on the private sector for new housing supply, then a smart developer is going to hold back pulling the trigger unless he's confident there's going to be profit or enough profit in the exercise. So without going off on a tangent, I think there is a role for governments to be looking at the safety net housing provision and actually stepping into the game rather than pointing the finger and just throwing money at the problem. But I guess that's a discussion for another time. But I'd love your thoughts on that, really.
I couldn't agree more. And I like to talk about the sort of the underpinning of the entire housing market sits with social housing. And as a nation, we've shirked our responsibility. Governments, successive governments. It's not left, right. It's not Liberal. It's not Labor. It's everyone. In the 50s, we constructed around 15,500 social homes per year. Since the 2000s, we've averaged around 2,500. right? And when we talk about the dwelling, the home shortfall that we have nationwide right now, if you plug those, if we had to build at the levels that we built in the 50s for the past 20 years, we don't have that problem.
Absolutely. Yep, spot on. Let's jump onto the demand side, because I think this is where there's a very good story for Victoria. You touched on population and the migrant inflow, and while, yes, they might initially be jumping into rental, there's normally a 2-year lag before they then start buying property. So there's going to be a big flow-on effect here. Talk to us about your read on the demand side of the equation, if you could please, Jake.
Yeah, you're bang on there, and that's I've had this conversation with lots of people over the recent months. Is that precisely that these new arrivals into our state start off in the rental market, but they make that transition over time, which means that the future looks really bright for property investors too. We touched on the sentiment piece, right? That often it's sentiment, not calculation, that actually drives the behaviours. And landlords, rental providers, as we call them here in Victoria, they feel like they've been through the ringer. They feel like they've gone 15 rounds with Muhammad Ali over the past 4 years, because there's been so much change so rapidly, and the conditions, you add in a pandemic and then interest rates going from 0.1% to 4.35% like that. And they're like, whoa, let's get out of here. But they haven't looked really at what their asset has done. They haven't looked at the longer term performance. They're going on the gut right now. It doesn't feel right, so let's get out of it. But what that translates into is an opportunity for the savvier investor to pick up properties that are probably as low as they're ever going to be, particularly when you think net migration is really high. And if those 600,000 people coming into Australia are going to turn into buyers, and there's a huge percentage of them right here in Victoria, right, what's that going to do to property prices? Only one direction, that they're going to go from here. And I think Oxford Economics has predicted or forecast that the median price here in Victoria for all dwellings, so that combines units, apartments and houses, will hit 1.16 million by 2026. And we're at 940 odd right now. So things are looking good if you can find yourself a piece of Victoria right now to call your own, whether that's as a home owner, as an owner-occupier, or an investor. It's looking bright.
100% agree. And we've got that constrained new supply, but very strong increasing population growth. Then you don't need to be Einstein to work out which way it's going to go. As I mentioned to you offline, I've voted with my feet. We've recently bought property in Victoria for all those reasons that we've just spoken about. Look, Jake, I want you to stay with us, because we're going to take a very short break, and we'll be back to discuss the rental market on the other side.
Successful property investment is a game of finance. Do you have the right team and the right game plan? Realty Talk is brought to you by Know How Property. More than mortgage brokers, Bushy Martin and his team of investment architects set you up with a sustainable strategy structured to lower your costs, tax, risk and stress while increasing your capacity for growth. Know How has helped over 1,900 homeowners and investors secure more than $800 million in property wealth. So get set to live more, work less, and live your legacy. Want to know how to invest in your freedom? Visit knowhowproperty.com.au. This is Realty Talk, powered by realty.com.au.
Welcome back to the continuation of our update on Victoria's property future with REIV President Jake Caine. Now, Jake, let's now turn to the rental market, and I'd love to get your initial thoughts on what's happening with rentals in Victoria at the moment.
Yeah, look, the most challenging time probably in the history of the rental market for renters in particular. Our rental vacancy rates have been sitting down, depending on who's measuring it, even below 1%. Now, a sort of balanced market sits around that 3% level. That's when there's enough homes available for the renters that are currently looking for property. So we're sitting at 33% of what we actually need, or what renters need to be able to secure safe, affordable and comfortable homes that sort of meet their needs. So that's creating a huge amount of anxiety and stress across the renter demographic, and that is a demographic, as we've already touched on, that's only growing here in Victoria and around Australia. And we also need to come to terms with the fact that it's only ever going to grow. It's only going to go in one direction. Our society is shifting towards that mix where home ownership's coming down, and the percentage of lifelong renters or really long-term renters is increasing. So that's an issue that we're going to have to tackle as a society across a number of levels, in terms of shifting our mindset around what it actually means to be a lifelong renter here in the country. From an investor perspective, or the landlord or the rental provider, as we call them here in Victoria, as we've already touched on, the conditions have changed really rapidly. And about 4 years ago, there were 130 changes to the Residential Tenancies Act here in Victoria. That was followed by the introduction of new minimum standards, which apply to all properties and required significant additional work and maintenance in order to get properties to a certain level. On the horizon, we have new minimum standards that are likely to be introduced in October of next year, with a focus on energy efficiency, sustainability credentials within the property. Put in there the COVID debt recovery levy as well, changes to land tax, and it looks, right, on the face of it, like it's been a really challenging 4 years. And there's no question, when you add in a pandemic into the mix there, that things were tough. But if you look at the rental yields today as opposed to 4 years ago, they're higher today. In fact, they're as high, if not higher, than they've ever been before. And that's factoring all of those costs.
Yeah.
So again, we come back to that point where sentiment's not great, metrics are way more attractive, when you actually knuckle down into that. So if you have the capacity to be a property investor right now, now's the best time in the history of Victoria to actually be a property investor. And an observation I make, which I made to you offline before too, is for all those changes that have come in here in Victoria, the reality is that we're leading in that respect. They are coming across Australia. There's no escaping it, because precisely that point I made earlier on in my comments was that we're shifting our idea of what renting is. And as a result, standards have to come up, safety has to come up, the rights of the renter have to become more comprehensive. The equality needs to sort of rule the day in that respect. So jurisdictions around Australia that haven't been through what Victoria has already, that's coming to you, whether it's today or whether it's next year or a couple of years, it's coming. So we're really well prepared here in Victoria because we've been through it. We know what it looks like. We understand the complexities. We've got our heads around the systems and the extra work that's required to get properties to where they need to be. And we've understood what those changing dynamics look like a little bit ahead of some of the other states around the country.
No, I think you make a really good points there, because what it's actually doing in Victoria is making the rental market more sustainable from a property quality perspective, which, yes, will be of immediate benefit to tenants, but ultimately lifting up the standards of property and the compliance generally from a landlord's perspective is going to make that property more sustainable and more appealing to a rental market that is clearly caught in a situation, given the strong demand and limited supply, is paying increasing rents and therefore getting better yields than what we've ever seen. So I think being the innovator and the leader of the pack in that perspective, and to some degree the guinea pig really in terms of testing and trying what's ultimately going to ripple out across the country. Again, as a contrarian, for those who can see the opportunity, take advantage of it while everyone else is, the old fearful and greedy quote that I spoke about from the outset. Those that are savvy and can see through that and can look at the underlying fundamentals and take advantage of it while the horde's fishing somewhere else are going to be extremely well positioned. So love your thoughts on that. I guess something that I would love to get your insights on, because there's been a lot of commentary around potential changes that might be impacting, looking at stamp duty and a whole raft of other issues. I've heard you talk about, just a slight lift in GST could very easily negate the impact of stamp duty and payroll tax and a number of other things. I'd love to get your thoughts on what positive changes you think could be implemented that are going to be a win-win for all parties.
Yeah, look, stamp duty is the big one. In any given year, 90,000 Victorians, and that number's even higher in New South Wales, and it's, equivalent, by population in other jurisdictions as well, right? 90,000 Victorians don't move in a year. And that means, when we talk about the supply side issue of the housing crisis that we're in right now, we've got 90,000 Victorians, which extrapolate that out, living in the wrong property, not right sizing, not effectively using our existing housing ecosystem. And I know Grattan Institute's down here modelled out what the economic impact of that is, and it was circa $5 or $6 billion in lost activity as a result, because people aren't living in the right area, working in the right area, or they're commuting to the wrong place, or they're living in a ginormous house that they have they don't want to be in, but they don't want to pay the changeover costs associated with stamp duty. Yeah. So changes to that would be transformational for first home buyers, through to retirees, through to right sizing, and that would have an immediate impact, right? We're not talking 5 years downstream when we can construct the amount of new homes that we need to house the people. Right now, that would have a really significant impact. So is that going to happen? The week before the state budget down here, Treasurer Palace, he started talking about it. He said, yeah, look, it's on the table, which had not happened before. It had never been considered. And so we weren't so naive as to think that we'd get something in that budget, the following week. Yeah. But I would suspect that it's under discussion. They changed the stamp duty situation on commercial and industrial properties down here in Vic. Yep. They've transferred through to, essentially they're replacing it with an ongoing land tax, which we don't love, right? Because it's an ongoing impost on people that are trying to run businesses, small, large, etc. And it's yet to be proven, and it'll take some time to prove the efficacy. The underlying principle for them was to get people transacting more in commercial and being able to buy their business a premise out of which to operate. That remains to be seen whether or not it'll have that impact. That solution, we do not want that solution, right? Land tax is sufficient, right? Yeah. As you touched on, we modelled this out years ago and put it to the state government. We know it's not a state government tax. We know it's a federal tax, but if you increase the GST to 10.45%, just 0.45%, you could get away with nationally stamp duty, land tax, and payroll tax. Can you imagine what that would do economically to this country? It would be phenomenal. It would be that's transformational. And when we go 10.45%, New Zealand's at 15%, the UK is at 20%, Europe's at 20% VAT, like 0.4, half a percent. So we'd love to see that happen, but right now we're aiming a bit more local. Let's get some movement on stamp duty.
Well, brilliantly said, because the golden handcuffs that effectively tie up property and become that major hurdle to make a change, if that's removed, then the flow-on benefits are infinite. as far as the exercise go, and
Exactly.
such a simple exercise to implement when you think about it. Just a very small increase in GST, and yes, that's a national issue, but most of the proceeds flow into state government coffers as a consequence of it. So love your insights on that, Jake. We're going to take another very quick break before revealing your thoughts on the future of property across the Garden State. So stay with us.
Finding the perfect property match for your buyer clients can feel a bit like searching for a needle in a haystack. But what if you could go from a client brief to a match in minutes? Using AI, we match your brief to pre-portal and on-market properties, send an alert, and give you an instant shortlist. Our AI search is working 24/7, so you don't have to. Stop spending valuable time searching, filtering, and doing DD. Let us do it for you, even while you sleep. We find the best match for you, and then we send it to you fast. Unlock bonus content now as a premium subscriber.
Now, continuing our great feature update on property conditions in Victoria with REIV President Jake Caine, I want to now turn to the future, and I want you to pull out your crystal ball, Jake, to get your insights on the medium to long-term property prospects across the state, starting with what ongoing downside drag factors do you envisage in Victoria?
Yeah, look, the affordability piece remains a challenge, and it's an interesting sort of conflict that we need to resolve as well as a country, right? You know, Melbourne is the 7th least affordable housing market in the world. Sydney's the 2nd least affordable housing market in the world. Now, if we meaningfully want to challenge that, I think the reality that we have to accept is that wages aren't going to grow at the level or the pace that we need them to make affordability, to make the dream of owning a home achievable for that sort of missing segment of our population right now that look at it and go, never going to happen. It's never going to happen for us.
Yeah.
And so that says, well, the only other solution is for property prices to come down, and all of the homeowners and the investment property owners across Australia don't want that to happen. So how do we resolve that? You know, even the ambition of the federal and the state governments, we've got a target of 800,000 here. There's the 1.2 million federally, right? If we reach those goals, what is the impact on property prices? You know, if we reach sufficient levels of housing, enough homes for everyone, what does that mean for prices? These are things that we don't talk about, right?
No.
But there are impacts there. So, look, affordability continues to be the challenge for people wanting to purchase a home and rent a home in Victoria. And the reality is, unless we start really pulling every single lever that we have available to us, that's going to continue to be a problem at least for another 2 years, right? Rents are going to, in the current climate, we touched on that, high levels of migration, a shortage of available rental homes. Rents are going to continue to creep up, and the pressure on renters is going to become more and more acute. The same goes for housing prices. We've got the interest rates. They stayed put today. When those interest rates start coming back, when they start cutting, the market down here is going to go bananas.
Yeah.
Right? Absolutely bananas. So the dream of home ownership, again, will become out of reach. Right now, the past 12 months, the most first home loans being written from any period in recent memory, right? But that will dry up if interest rates cut, and then people start coming back in and transacting in a hyper-competitive marketplace, which we have every expectation, particularly given the figures you quoted at the start in terms of where we've come off.
Yeah.
We're the exception to the rule around most of the rest of the country, although I think Brisbane and Sydney were slow last month. Yeah. But we've got capacity to go back up. So I think affordability is the major issue. Like I said before, the legislative environment, we've kind of done the heavy lifting. We're through that. We're coming to terms with it right now. We're sort of coming out the other side. So I think that that's going to remain stable, and I think we're going to see around the rest of the country that people are starting to go, whoa, hold on, I can't. I have no cause. Vacates not an option anymore. Oh, I have to have gas and electrical and smoke done every year, every 2 years. That's an extra $1,000 I'm paying, and the calculus will start to change for them too.
Yeah, 100% agree. Yeah, an area that is increasingly on people's lips is the impact of climate change on housing and property generally. Yeah, it's probably more attuned to what's happening in some of the northern states. But what's your view on the impact that it might be having, given that there is a rising incidence of extreme weather and associated events in the context of Victoria?
Yeah, this is an area I'm really interested in. And I think we, as a sector in real estate, need to be really interested and in tune with it, and we're not right now.
Yeah.
That's the problem. So, a few things, like let's put aside the existential threat that climate change is. Right, put aside the social and environmental imperatives there are to take action in this space, right? The economic imperative is the one, and that's ultimately what we're talking. Which if you don't care about the other stuff, focus on that. Now, banks, right? As of July 1, they have to report on scope 1, 2, and 3 emissions. Now, technically, their mortgage books are scope 3. So they're looking at resilience, right? So whether or not a property can stand up to the effects of climate change, and they're looking at the emissions and going, we have to de-risk our portfolios.
Yep.
So they're going to look across these millions of loans that they have for houses just across Australia, and they're going to go, we either have to cut that out or we have to fix it, because otherwise we're not going to meet our scope 3 emissions reporting targets, right?
Yes.
So there's going to be a massive drive. Down here, I touched on it earlier, the minimum standards around energy efficiency are changing. Yep. Now, the government says, and don't get me wrong, I love that they're doing it. It's terrible timing from a cost perspective, but it needs to happen. But the government says it's about improving the renters' experience. No, it's not. It's about them hitting their 2030, 2035, 2040, and 2050 emissions reductions targets. Because if we don't do it in the established built environment, no government anywhere in the world is reaching their 2050 targets, right? So that's cynical, but that's really what's driving it. And that's so we need to make the change. And for property owners and property investment owners, right, getting on the front side of this, you touched on it before with the discussion around minimum standards, right?
Yeah.
If you improve the energy efficiency and sustainability and resilience credentials of your property, it is worth so much more, right? Because people are going to have to buy this. We already have to build at that level. The Natters went up, in Vic and Queensland start of May, so you have to be 7-star to construct. Gas is going. Right, it is not going to be a thing. You cannot build with gas in Victoria anymore on a new build, right? And that's going to happen everywhere. So getting ahead of it, that's the opportunity. That's the big opportunity for property investors, right, is to capitalize on that. Over in Europe, when you go onto their equivalent of realestate.com, Domain, View, etc., they have 2 beds, 2 bathroom, 1 car park, 7-star energy efficiency rating. And you do not want to sell if you've got a 2-star energy efficiency rating. So the banks are going to come on board. They'll give money to people, right, at a really cheap rate to upgrade your property. Get in front of it. Do it now.
Very well said. Let's sort of jump to future growth drivers then. We've touched on population and we've had a bit of a chat about lifestyle trends. Love your thoughts in the Victorian context around infrastructure and other growth drivers that you're likely to see impacting on the property markets moving forward.
Yeah, look, we said at the outset, the fundamentals here in Victoria are still strong. We have the advantage, I suppose, geographically over, say, a Sydney in terms of being able to build up and out a little more easily, which we need to do. We need to, all governments are talking about heading to medium density, not high density. Medium density, the OECD's shown this, right? Like it doesn't, the equivalent of a Singapore, we don't need that to be able to build sustainable cities that have access. Medium density, think more like the boulevards of Paris, and that's what we kind of need to aim for. I saw something this morning though that basically said that it's unavoidable that Melbourne continues to sprawl. That I don't necessarily accept that, but new research is coming out all the time. That you kind of have to consider all aspects. But I think from an infrastructure perspective, we're fairly well placed, right? We can build up in certain areas, right, and turn them into this more decentralized concept, right? So it's the CBD is not the focal point, and the government's got in mind they've identified sort of 7 areas throughout sort of Metro Melbourne that they're going to focus some real attention into doing this. One that I'm really interested in is in Camberwell. I don't know if you know Camberwell, right? But this is an inner eastern suburb or an eastern suburb, very affluent. The focal point of that suburb is the Camberwell Junction. It's a high-end, expensive area, right? Beautiful 800, 1,000 square metre homes, period homes. If they can make it work there, if they can get the density up to medium, if they can maintain access with the infrastructure that they'll put in place to support it, then they can do it anywhere. I think, so I'm keenly watching that. The other big, look, we're going to continue to have strong migration into this area because we haven't achieved our sort of bursting point from a population perspective, and because of those things, we've got space. We can keep growing out. We can keep building up in those areas.
Well, what about the regions? What's your thoughts on the future of property in the regions for Victoria?
Yeah, I think increasingly those big regional centres. So, I mean, Geelong is, the gap between Melbourne and Geelong, some would argue is that we're one and the same. My listeners in Geelong would argue vehemently against that, and I don't mean it in a real sense, right? But there's nothing. There are suburbs all the way between here, and it's like Parramatta and Sydney. And the same is going to happen. The Bendigo is expanding out, Ballarat is expanding out, and that's people pursuing that lifestyle. They can do it more readily nowadays because we're still in this world where there's hybrid work and increasingly people are able to do their jobs entirely remotely. So why not go out and get an acre block, have a beautiful house with heaps of space? It's great, it's healthy. You've got really attractive, growing, vibrant cultures. Even in these smaller centres, places like Caine, it's about 60 k's out of Melbourne. Is you could feel like you're walking through Collins Street in terms of the restaurant choices that you have down there. You've got everything available to you, and you can get a really fantastic home for. Well, it's creeping up significantly. It's not super affordable anymore, but for less than you're going to pay in a eastern, southern or northern suburb in Melbourne. Yeah.
Yeah, no, awesome. Look, again, it just reinforces to me that the long-term property players are going to focus on the fundamentals. If you to put a bow around all this and sort of summarise the future opportunity, what would be the takeaways?
Look, we've already said it in the simplest terms right now. Victoria is affordable comparative to other places around the country. And, we use the term safe as houses for a reason. Or you have to look at the past couple of days and look at what's happening in the volatility on the stock market. And you go, can I weather a couple of % down over a 2-year period and then, sustain growth over a decade where we're seeing double-digit growth annually? I know where I put my money, and that's in property. And right now, Victoria presents an incredibly attractive prospect for whether you're investing or whether you're relocating and looking for a fantastic lifestyle at a more affordable than our neighbouring states. Yeah.
Truly well said. And I guess the thing that's also worth reinforcing is that it's not unusual to see a settlement or a slight decline of anywhere between around the 5% after an area's gone through some growth, and that's exactly what we're seeing. So those of us who have been in property for a long time expect that to be the case, but it's also the time when contrarians like myself leap on that opportunity. So, look, I really want to thank you for your very in-depth insights on the future of Victorian property, which clearly reinforces that contrarian opportunity for long-term savvy investors, Jake. And I really want to encourage you to continue to share with us on the show. And thanks for being so generous with your time on the show today.
My absolute pleasure, Bushy. Thanks for having me on.
Join us for more property news each week with Realty Talk and get invested. You can do that by subscribing to the Property Hub on all podcast players. Join the conversation on Facebook too. Just search the Property Hub Collective and give us a like and make sure you follow. Thanks to our supporters and content partners, Realty, BMT Tax Depreciation, Know How Property Finance, Get Rare Property, and Apiro Marketing. Until next week, all the best.